But back to the markets then, and for the equity markets, we're still holding on to those gains. Getting on board our experts, Manav Chopra of INDIABULLS Ventures, he's joining us right now on the show. Rich Jain of Angel Broking is also here with us. Along with him, Jagannathan Tunuguntala is here with us on the fundamental side too. Let me start off first with the technicals with Manav and Ruchit. 1% higher this afternoon, holding on to some gains after a decent enough bounce from yesterday's 10,900 levels. Would you go long? Manav.
See, at the current zone, yes, the markets would remain choppy. We are at the oversold levels and we have managed to even hold yesterday's low. So yesterday's lows and highs would mostly be a very important key pivot levels for the markets going forward. On the lower side, 10,900 and 950 are the important support clusters. So as long as these support holds, we will see some choppy action. I don't see any sharp trending action on the upside, but for any positive momentum for the markets to come in, we would want to see a break and close above 11,150 zone. So we maintain this stance what we had also mentioned last week. So 11,150 are the important hurdles for the markets, and only on a decisive close above that you would see some sort of a momentum going forward. But for any short-term play, I think 10,900, 950 are the important support that we are looking at. Along with Bank Nifty, the important support would be at 27,700. So break of these support levels, there could be a short-term pain going forward, but in this scenario and after the sharp decline that we saw yesterday, the kind of a bearish candlestick pattern that has been formed, we would want to see a break above those highs for any positive momentum, at least in the near-term perspective.
All right, Grasim, numbers on your screen. Revenues, I think 5,000 crores. These are, I think, standalone numbers. Profits at about 202 odd crores.
Yeah, Devina, the standalone profit revenues seem to be flattish, maybe 3 or 4% uptick on the revenue front. So doubt that there is any dramatic improvement. That the standalone profit at 202 crores, if my memory serves me correct, is also lower than the corresponding quarter So on last year. So that also wouldn't make too much of a dent. The stock has come off a little bit from the highs of the day. I presume, largely on account of the net profitability coming off, maybe 30-40% off from the number that was there. Now
there was an exceptional item, I think, which has been reported of 290 crore. Probably that's the reason why bottom line is seeing just such a sharp downtick this time around.
Maybe that's why the stock is now bouncing back as well, a little bit in trade from the lows. But 290 crores, add to that the 202 crores, I would reckon still the numbers, profit number would be flattish and no dramatic uptick there. The numbers on your screen now, revenue, the estimates were 5220 crores and the revenue is at 5,000. The net profit at 202 crores, don't quite have the estimates right now, but I guess that adjusted for exceptionals, maybe there, 624 crores was the profit.
Exceptional loss of 290 and then there is a tax expense of 52, so adjusted exceptional item is of about 237 crores.
So 237 and 200, 437 crores, still substantially lower than what the corresponding quarter number last year was. I think the EBITDA numbers probably, let's wait for the EBITDA numbers to come out as well. That Bloomberg grab showed the numbers of the EBITDA, the net profit and the top line numbers. They seem to be largely around what the street would have been working with.
I think the loss is on, they've given the reason for the impairment.
This is towards, they've impaired the investment of 290 crore in Aditya Birla Idea Payment Bank Limited, an associate of the company, of course, that we know, and that's the reason that impairment cost has been factored in.
Yeah, it was when they did this, it made news, of course. Now the stock is just bouncing back a little bit. Jagannathan Tunuguntala is with us. Jagannathan, whatever little numbers we've read out of Grasim, do you track this one? And beyond the numbers, just the pain that we're seeing in Vodafone Idea and the fact that on the console books as well, Ultratech off late has not quite lived up. What's the verdict on the stock?
In general, of course, Grasim numbers, I think too early to take a call, but cement markets were little hopeful that numbers will come good, because if you look at last 1-2 quarters, despite most other industries have been disappointing, but cement has been doing reasonably well with on the back of healthy volumes, and some cement companies are also enjoying pricing power in certain regions. So overall, the expectations of the market is that the cement numbers should come good. I think let's wait eventually looking at actually the extraordinary item and other breakup of Grasim. But if you look at the overall earnings season that has been ongoing, Grasim is the last of the Nifty 50 stocks. Before this, out of the remaining 49 stocks, the Nifty EPS has grown just by 2.2% year-on-year basis in terms of EPS growth. Probably that is one of the lowest EPS growth we had witnessed over a very long period. And out of that, again, the most of the heavy load was pulled by the banking stocks. Almost banking profits went up by 149%. Other than banking, remaining industries have clearly suffered, and there was a profit degrowth of almost by 12 to 13%. So all in all, I think we are in the middle of one of the slowest earnings season.
All right, some more numbers. Margins at 16.9% versus 22.5%. Ebitda also has come in much lower this time around. I think 893 odd crores in terms of the Ebitda number versus 1,000 crores plus. The stock, though, however, has recovered about 736. But I think going back to the index, Ruchit, you seem to be like it's going to take some time for you to turn the page and get positive on the market, even if the market has seen the short-term rebound. Do you believe there's more pain on the Nifty?
Yeah, hi, very good afternoon to everyone. Well, if we look at last couple of weeks, then certainly 10,800 to 10,900 range has gained some respect, and we have seen some pullback move thereon. Although there are no signs of indication of bottom being made or a resumption of the high degree uptrend, but I think we would see this pullback move getting extended up to 11,250 to 11,300 range. 11,150 is the 170 is the first resistance range from where we have seen correction in yesterday's trading session. But we believe that going ahead, that would be crossed, and some retracement pullback would lead to extension of this up move towards 11,250 kind of levels. So at current levels, we are advising clients to trade with some positive bias, but very selective in stocks. And on index front, if one has to take any long position, then one should do it through options. Next weekly expiry is 11,100 call option, which is quoting right now around 68-69 rupees, can be bought with a stop loss below 34 rupees, expecting target around 145.
Okay, that's the index strategy from Richard, advising to buy the 11,100 call for the next Thursday expiry. But let's also get you some stock-specific ideas. And Manav, if I could come to you in terms of individual stocks for this afternoon, what are you recommending?
Yes, I have two buy calls. My first buy call is on Tata Global. In fact, the prices have been in a very good uptrend, and recently, after a short pullback from its recent highs, the prices are still managing to hold to its short-term averages. The momentum indicators also on the weekly chart continue to remain positive. And in the near-term perspective, in past few weeks, the stock has been a good outperformer and has seen a good outperformance in spite of such weak markets. In fact, the prices have also managed to form a breakout on the weekly chart perspective. So in all, this stock is looking very well poised to see some sort of a move on the upside. On the lower side, it has some important support at 255, which is our stop loss, and on the upside, we recommend a buy into this for a targets of towards 300. My second buy call would be on Siemens. In fact, the prices have seen a series of decline from its recent peak of 1360, and last week the prices witnessed a good pullback rally from its oversold levels after testing its long-term averages. Also on the daily charts, there has been a price and volume breakout, which is indicating for at least a short-term bottom in place. Keeping this view, there is a limited risk, good entry even at the current levels with an attractive risk reward. Stop loss of 1140 on the lower side, and we expect an upside target of close to 1240 in next few weeks.
Okay, Ruchit, your ideas?
I have a couple of buy recommendations. First is a buy call in Petronet. Well, this has been one of the outperforming stock in the recent past. If we see, the markets have declined significantly since in last 3 weeks, but this stock has in fact given some positive returns, and its 200 DMA has acted as a good support in last few weeks. So the high top high bottom structure is still getting continued. So we are of the opinion that this outperformance is likely to continue going ahead. Petronet can be bought even at current levels with stop loss below 237, expecting target around 256. And JSW Steel is my second recommendation. although most of the metal names have been in a downtrend, but today we have seen some signs of a pullback move. And since the down move was very sharp in last few weeks in most of the metal names, the pullback move should also be should also retrace very sharply. So JSW Steel on the hourly charts has given some positive signs, and we believe that this could extend towards 245, 246, which were the earlier supports broken. So one can go long in JSW Steel with stop loss below 220, expecting target around 245.
All right, Sun Pharma is one stock to look at. The stock, after being up about 4% post results, post some commentary today, the stock's down about 5%. 417 on Sun Pharma. Dr. Reddy's too takes a dunk in today's session, 2.5% lower at 2,497. Jagannathan, what's your take on pharma right now, particularly these larger companies?
The pharma, I believe the overhang of US elections will remain. I believe till the time of US elections, November 2020, I'm sure that Donald Trump will remain aggressive, because healthcare is a very sensitive topic in US elections. He wants to position himself before his electorate that he has always maintained lower healthcare cost and lower medical bills, so on and so forth, meaning thereby he will indirectly impose pressure on emerging market pharma companies, and Indian companies will be no exception. I feel till the time of that elections, I feel these overhangs of pharma will continue. I think even though most of the stocks are beaten down and many are available at decent valuations, I'm not sure how much upsides will really sustain. I think investors have to be extremely careful as far as dealing with pharma at this juncture.
Just want to mark Gateway District Parks. I think the numbers came out and there were some adjustments, India's accounting, etc., and all of that. But the numbers not the most optimistic. Sure, on a comparable basis, they may have looked okay. I think they came out about 10-15 minutes ago. But the stock is certainly revving up in trade, about 18% higher. Do watch out for Gateway District Parks in the session today. Has done well, but the numbers are okay. Just keep that at the back of mind. Nothing too special about it. The stock for now going up. Let's see if it lasts that way. The interesting bit, and Manav, the one that looks very interesting today, the price movement, is INDIABULLS Housing Finance. 2 days on a trot when the markets were very volatile. That one went up double digits each of those days. Today started off well, but now at a time when the market is doing well, the stock is down 2.5. Okay, Manav, I'm sorry, but you can't speak on INDIABULLS. Ruchit, let me ask you, what would you do with INDIABULLS Housing Finance?
See, broadly, if you see, the trend for the stock has been negative since last few months, and the low top low bottom structure is still grinding continued. Yes, whenever the momentum readings get oversold, we do see some pullback moves, but those pullback moves as of now has not been sustainable. So I think the volatility is likely to continue, and until we get a breakout above its 200-day moving average, which has also acted as a resistance in the previous up moves, until we see a breakout above the same, I think we should avoid trading into such pullback moves. The overall trend continues to remain negative. And for a short-term perspective, 485 to 670, this would be the broader range in which we expect this choppiness to continue.
Okay, that's with regards to INDIABULLS Housing Finance in the session today. Pharma has had a really bad outing in the session today. I know we spoke about Sun Pharma individually, and that one is a standout performer, but Dr. Reddy's too a volatile performance today and has corrected. We've seen some correction in Glenmark Pharma as well in the session today. That one is down about 7%. The usual suspects, Jagannathan notwithstanding, Glenmark in particular.
Yeah, I mean, overall pharma has been under tremendous pressure, even where there is a slight bit of underperformance or slight bit of any disappointment. I think markets have been extremely punishing. I think that's almost true for across the market. At this juncture, the US market revenue, the Glenmark unable to pull the load and not able to take advantage. I think it's one of the major concerns at this juncture. So all in all, as I said, I think as the overall pharma, I feel can be a clear can suffer in the backdrop of Trump's way of dealing things and how he mixes his business and politics.
Okay. That's the view on Pharma pack. Sugar stocks have moved higher, so pull up stocks like Dhampur Sugar, that's up about 10% in trade. You've got Dwarkesh also surging nearly 17 to 18%. Remember, the move for all these companies have just come in the last 15 to 20 minutes of trade. Dwarkesh, in fact, is locked in upper circuit with gains of 20%. Triveni also up and about, Mawana Sugar, Andhra, you name it, and all of them have seen substantial gains. We've not seen any development coming by, but remember, the move has just come in the last 15 to 20 minutes for these companies. Manav, if you're tracking any of these sugar stocks, would you take a bet on any of these companies?
See, at the current levels, all these sugar stocks have already seen a sharp decline from its recent peak. Most of these stocks like Dhampur and Triveni have declined more than 30 to 40% in last few months. But looking at the chart perspective, yes, this bounce, since it is already a very sharp bounce today on the intraday basis, I believe one should not take any calls at the current juncture, because it's not providing a risk reward. And secondly, they are still in a medium-term downtrend, so we need some more base building, at least a strong confirmation, at least on a price and volume breakout if it happens on the weekly basis. So at the current zone, I think one can only keep this as a wait and watch approach. In case specifically for Triveni, if for the near term perspective, if the support of 50 and 52 are held and we see a pullback rally and sustaining those levels, then probably one can take a trade. But at the current levels, I would definitely suggest one should avoid this stock and let these stocks settle down for a bit. Since they are bouncing from oversold levels, these could be just be a short-term trading bounce and nothing like that.
The other pocket is the aviation, and in